Because banks are so bad at taking care of kids, they've gone out and a whole industry has crept up just focused on kid banking. And I think that's awesome. And I think a lot of parents have done a great job teaching their kids financial tools, and there's some really powerful tools out there. I also happen to believe that a banking experience built for families would just give you that stuff included. It's not difficult stuff to provide.
For our FinTech Spotlight segment this month, we are featuring our sponsor, Crew, a company focused on banking for families. I've invited the CEO and founder of Crew, Gentry Davies, on the show to discuss family banking and how Crew can help your family. Welcome to the show, Gentry.
Thanks so much, Andy. Really great to be here. Really excited to chat.
Absolutely. This is a fun concept. And as I've scoured the marketplace, doing what I've done for the past, 7-8 years, this is something that is missing. Can you talk to us about what is family banking?
Yeah, for sure. It is kind of a new concept. So there are a lot of really great tools out there serving families. There's not a lot of tools that are focused on family banking as such. And so that's where we're kind of focusing is, can we take a lot of these tools that are for parents managing their family finances, for kids learning financial literacy, and bring those all together and make them better for being in the same spot. So what would an ideal banking experience look like for families?
Got it. And this isn't private family banking. Sometimes you look at that's a completely different concept, right?
It is. Yeah, we're not talking about a family office or private banking, but there's a lot of similarities. I think the financial services industry has recognized that the pinnacle of financial services is oriented around a family because, you generate some wealth. Their customers, they obviously target very wealthy customers. And a lot of times their main focus is now legacy and how do I not screw up my kids? And how do I do good with all this money? And I think the mass affluent audience, the people who are not using private bankers, but have a good amount of money, they have all those same questions and same problems. And so family banking, as we think about it, is one way to bring those solutions to a much wider audience with exactly the same needs that the wealthiest people have.
Got it. Yeah, family banking for the people. I love it. So how is this different than technically? How is this different from a joint bank account then?
Yeah. So a joint bank account. I mean, at its core, there are joint bank accounts in Crew, and we think that that's central to family banking. But it's a whole bunch more than that. So you go beyond the joint accounts for your parents or for the parents, and you go to how do accounts look for children as well? So if you were to go to a local credit union and say, all right, here's the setup that I want. I want a joint account with my spouse. I have 3 kids. I want them to each have a spending account and a savings account. And I want both parents to be actual owners of the account and the kids to be authorized users until they turn 18. They're kind of whoa, slow down. Let me get some papers. Let's bring out the IDs if they can do it at all. We talk to people all the time who are wiring money to their kids at 17 because the other spouse set up the bank account and they've called a few times, and it's just not how traditional banks were set up to operate. Traditional banks were set up to operate on an account specific model. They think in terms of accounts, not people. And so when we think about family banking, I like to use the term multiplayer banking. What would that experience look like if it was built around the people that are involved and their relative roles in the unit, the family in this case, versus an account-centric model, which is how traditional banking is operated.
Got it. Yeah. Well, you're the founder of Crew. Why did you want to start this company?
Okay, so this has been a really long journey for me. I started out at a local bank, like most people do, when I was 14. My parents got me a lava lamp from the local bank. That was the promotion that they were running. We know the toaster promotions get a lot of play, but there was a lava lamp play in the 90s, which is unsurprising, I guess, if you lived through the 90s. So I was there for 16 years. And by the time I was a little further into my career and started having a little more complex banking needs, it was obvious that they were falling short. And, I needed to do really basic stuff that I could see other banks offering and other tech companies offering, and it was really slow for them. So I started looking around saying, oh man, I don't have to bank at a very old kind of crusty place. So let me look around. So bounced around to a couple of the neobanks at the time. I don't want to throw shade at any of them specifically, so I'll do it generally. But, one of them kind of felt like I was getting cross-sold constantly, products that weren't relevant to me. It felt like I've never flown Ryanair, but it's how I imagine flying Ryanair feels, where it's like ads on the seat in front of you and people like hawking stuff up and down the aisle. And then the other one felt like, 70% of a bank account hidden inside of a robo-advisor. Like it just didn't feel like it was built to be a modern banking solution for families. So I led the product management team at Divvy previously, and that's really where we got thinking about multiplayer banking and what that would look like. And we had people all the time that were like, man, I want this for my family, and realized that business banking options had outpaced consumer banking options. If you start a company, you can use Mercury or Ramp or Brex, and you can have like an amazing experience that's, good economics, good support, a really great, modern UX. And then we go home and we're using these local banks that are total afterthoughts, their digital experiences, or these national banks that have just really fallen behind. So after trying out a few of these myself and realizing no one's done this, like no one's built a phenomenal modern banking experience that works for families, we figured let's have another run at it once we wrap things up at Divvy.
I love it. Well, talk to us more about Crew and how it can help families that are listening right now. How does this new development, this company you founded, solve this family banking challenge?
Yeah, so as I kind of tried to crystallize, what am I looking for in a bank for myself, and like what are my needs when it comes to banking? You need a joint bank account. Most neobanks fail this right out of the gate. Like I used Simple way back in the day, and like it was awesome for the time. And I'm one of the many people who was heartbroken when it got shut down. But they didn't have joint accounts, at least for the first several years. And so we've made sure that that's available just right out of the gate. So joint bank accounts, a beautiful app experience, I think, is baseline. Everyone needs it. If you're going to switch, it's got to be awesome. Great economics, which we have with Crew. We're paying 4.7% APY in savings for everyone in the family, and then an additional 1% in checking. So feel really good about both those things. World-class support. So you're not calling in and dialing through a tree and waiting forever. We've got like in-app chat, got text support, all that kind of stuff. So that's what I was looking for, is just something that looked like it was built for families. And then there's a whole bunch of little things that we've done to make this feel right for a family. I'll just share one of them that is trivial, but we've never seen anyone else do it. We've just separated the kids' accounts from the parent accounts. When you log into Crew, you see your accounts on the homepage, your checking and savings joint accounts. If you want to go deal with your kids, you hit the family tab and you see a list of your children with their accounts nested under their names. So everything's neatly organized. If you've ever set up accounts like that at a traditional bank, you just get this big long list of accounts. And now your kids' stuff is mixed up with your stuff, and every transfer becomes more painful. And so we've taken that kind of from the get-go and said, all right, let's make sure we organize this by person so that your kids being in the same product make this better, not worse.
Got it. Yeah. So, there's a lot of big companies out there that are attempting to do this. And as you said, maybe it's a more clunky process. Let's talk to the person who's just like, yeah, I've got Chase, and they've got the kids account, they got the teen account, and then I've got my account. Like, how does this really all that different?
Yeah, if you're using Chase's thing and you're having a great time, like, more power to you. If it's not broken, I won't argue you should fix it. But what we hear from people who have switched from Chase to Crew, the kids' accounts are fairly limited. So when your kid gets old enough that they've got their first job, there's no direct deposit support. They're not real bank accounts. They're like a card just connected to your bank account. And we've heard a lot of frustration from parents where that wasn't clear when they signed up, and then it was very frustrating when they got to that point, sometimes a couple of years in. We smoke Chase for yield. They don't feel they need to be competitive on rates, and they might be correct on that point in broad terms, but I think they've seen a lot of deposits leave over the last year. They've lost $400 billion in deposits, mostly to digital banking experiences that are sharing yield in a more equitable way, and perhaps they'll change their tune at some point. But they're very stuck with their 0.01% interest, despite the risk-free return being over 5%.
I love that. Well, talk to us about the economics of that. How are you able to pay such a higher APY than Chase?
Yeah, so Chase could. That's the direct answer, is every bank could pay a fair interest rate, and they just don't feel they have to. That's like the shortest version. I can get more technical than that. Banks make money by lending money out at a percentage that is higher than the percentage they pay for deposits. So right now, if Chase is originating mortgages around 7% annually and paying 0.01% in interest, they've got long-term stuff to deal with, but it works out very well for them. And their credit card revolving interest is much higher as well. Like, they're doing great. They have a very large spread there. You have to manage your risk as a bank, and you can't, lend all of your deposits in most cases. But there is a risk-free return where you can lend these deposits to other banks on an overnight basis, and that's essentially the price that you earn is essentially the federal funds rate. That's why that's an important rate. And so you can think of, as a consumer, any difference between the federal funds rate and what you're earning in your interest in your savings account as the price you pay for your bank account. And so I tell that to people all the time. If they've got $50,000 sitting in a Wells Fargo account earning nothing, they can do that math very quickly. I'll do it right now. So if you got 50,000 bucks in there, the federal funds rate, is like 5.3-ish. So that's $2,600 a year that you're paying for the pleasure of using the world's worst banking experience, right? And so and people are welcome to do that, of course, and many people do. But I think as people realize, oh man, I'm not using the in-person branch. I actually hate it every time I have to visit. That's a failure. I'm not willing to pay $2,500, $2,600 a year in foregone interest for the pleasure of banking with this institution that doesn't take good care of me. Those are the people that Crew really resonates with.
I like that. So that is how you guys make money, because this is a free account, right? Just like most banks.
That's right. Yeah. So we make a small spread on savings. We make a bit of a larger spread on checking accounts. And then we make money from merchant fees on the debit cards. In the future, we may introduce like a minimum, $10 a month, unless you have a certain amount of deposits with us. But we haven't had that need so far, given that we've had an average deposit of $11,000 per account so far, which we feel great about.
That's great. Yeah, people are probably doing the math and saying, hey, $10,000 in there is going to earn me whatever, $470 a year or whatever. I forgot what the rate was. You said 4.7? Is that what you said?
Yeah, 4.7%. Yeah.
Okay. So yeah, I mean, that's the easiest $500 you're going to make is just having a little bit of money in there. Talk to us a little bit about the child side of things. I understand there's allowance features and other features like that. Talk to us about that.
Yeah, for sure. So one of the things that we've seen is, millions of families have gone out and paid for dedicated child banking tools because banks are so bad at taking care of kids. They've gone out and a whole industry has crept up just focused on kid banking. And I think that's awesome. And I think a lot of parents have done a great job teaching their kids financial tools, and there's some really powerful tools out there. I also happen to believe that a banking experience built for families would just give you that stuff included. It's not difficult stuff to provide. So that's what we've done with Crew. So yeah, Crew has the ability to add your kids. They can earn the same interest rates that you're earning. These are accounts that are in their name, where the parents are the owners. And when the kid turns 18, they can take it with them. When they're ready, they can emancipate and keep their card and their account number that they've been using for several years, and their account history and all of that with them. So that's the kind of long-term vision, is we just want to be the first and last bank account that people need. And then while they're at home and really young, we have allowance functionality. I'm a huge fan of allowances. When your kid is old enough to understand delayed gratification and some of these trade-offs, and maybe not like old enough to earn a bunch of money outside the home, love the idea of an allowance that can kind of give them some play money to think through. And so we do that. You can set, an amount that you want to go to spending, an amount that you want to go to savings on a weekly basis, choose what day of the week, super simple. And kids can log in on their device if they've got their own phone, and they can manage their spending there, send money within the family, that sort of thing. If they're really young and use like a shared iPad or something, you can actually log in with a QR code as well. And so that's what we do in our home. Is I've got a 6-year-old who loves to keep track of things on the family iPad.
I love that. Yeah, that's great. Yeah, this seems to fit a sweet spot that's missing in the industry for sure. Now, banking as a service companies have come under some scrutiny lately. One specific one that a lot of us are aware of that listen to the show is Copper. They were involved in this sort of Synapse snafu that left some people in a really bad way with their deposits. How are you guys protecting your clients, new customers, to avoid this type of situation?
Yeah, it's a great question, and obviously high on my mind. Most customers have, now heard some of the news that have happened here. It's kind of gone beyond just the inside baseball fintech crowd. So I'll answer your direct question first, and then kind of expand to what I think is maybe a broader, really interesting point here. So, Synapse was doing all kinds of shenanigans that were way more complicated and problematic than were necessary for what they're trying to accomplish. Within the industry, the reputation has been really bad for a long time. I have a lot of respect for the Copper team. I know a lot of those guys. I think they're really good people. But yeah, Synapse has had a really tarnished reputation for many years. I'll give a couple of examples. Some of them happened with Copper, some of them didn't. Yada and the others, where they were moving money between banking institutions without like customer authorization or notification. They were converting bank accounts from true like DDA bank accounts to brokerage accounts with just like a very passive, like, hey, small change to your account, no big deal. So just all kinds of stuff. And I think like that's what created the mess. It sounds like, Copper was able to return deposits quickly to customers, but it was still disruptive. We're not doing anything remotely as exotic and problematic as what Synapse was encouraging. Our setup with Bangor Savings Bank is super vanilla. It's real bank accounts held at Bangor using their extended fintech partnership core as the source of truth. So the cash, we never touch it. It goes straight to the bank. The bank holds the funds and is a source of truth for whatever one has. So there's none of the nonsense that we experienced with Synapse here. So I think the broader interesting point here is, whenever you have a hot thing in tech, and it comes in these waves, right? It was cloud when I started my career, and then it kind of moved into big data, and then it moved into like fintech was the hot thing for a while. Now it's AI, crypto is kind of mixed in there with fintech. Whenever that happens, you have a bunch of tourists that follow like the new hot thing. They update their LinkedIn bio. They've been passionate about the new thing for 10 years now. And there's a bunch of VCs trying to fund too few ideas with too much money. And a bunch of companies get funded that probably shouldn't, and a bunch of nonsense happens. Then eventually the tides shift, the winds shift, and the tourists move on, companies fold. And I love that. I think it's super healthy. I think you have like a serious players that stick around and make it through, and a lot of the noise kind of diminishes. So it's growing pains, but it's much needed. I think many people in the industry have been watching Synapse specifically, and then some others as well, and hoping that something would happen, because it's dragging all of us down to have players that are like deeply unserious, that are harming customers. So anyway, we take this seriously. We're veterans. We're not tourists. We've done this before. We've grown a program to $1 billion a month in credit card spend, and had a very robust compliance and risk function there. And it's at the core of our strategy here at Crew.
Well, I love that. You guys are veterans, not tourists. Everybody, if you're interested in trying out Crew, I am a supporter. I am a sponsor. I'm a partner with them. You can go to marriagekidsandmoney.com/crew. And this is something that I'm happy to have Gentry on the show to talk about. Is because something I believe in, and I really think that they are hitting a special spot in the marketplace. A lot of parents that I talk to, they're like, where do I get an account for my kids? And then you talking about all the details of what's out there, and there's a lot of confusion of like, okay, well, that doesn't work for me. That works for the kids, but it doesn't work for me. Crew's hitting a sweet spot here. I think they're going to do really, really well in the marketplace. Gentry, thank you so much for your time today. I really appreciate it.
Love it. Thanks, Andy. Really great chatting.